Hey there, today I'm going to talk to you about a life situation that should cause you to review your current insurance coverages and or work on getting them in place, and that is marriage. If you are planning on getting married or if you are currently married, this is for you. I'm going to start off by letting you know that I'm making a few assumptions about you. The first assumption is that you love the person you're marrying or are married to. The second is that you want to protect and care for them along with everything you've built together. I'm also assuming that you want to build a life with the person you are marrying and or are married to. And the last assumption is that you currently share expenses or you will be. So here are some situational considerations for you to ponder. Single income households. Income protection is absolutely needed if you are a single income household. If you are the breadwinner, here are some questions to ask yourself. What happens to my family if I die? What immediate decisions will my spouse need to make should they have zero money coming in effective immediately? Big question here, does my lack of insurance show that I love my spouse and want to take care of them and protect them to the best of my ability, even after I am no longer here? Now, if that question makes you uncomfortable, sorry, not sorry, I am putting you on the spot. It is a super important question, and I hope that you want to show your love through action and not just through words. Stay-at-home parents. So while we may not be directly replacing income here, stay-at-home parents contribute a lot to the stability of their homes, including the financial stability, because they are taking expenses off the plate. So while they may not bring in an income, they are eliminating expenses. And one of the most obvious is childcare expenses. Okay, so if your stay-at-home parent dies, you are going to now incur childcare expenses. You're also going to incur additional duties, household domestic duties, such as now you're going to be the one running the errands. You're going to be the one solely in charge of maintaining the household in its entirety and overall domestic duties. If your stay-at-home parent has life insurance coverage and they die, that life insurance can help you in this transition period and help you pay for those additional expenses you're going to incur and get the proper help that you will need in place for your benefit and also for your children's benefit. Let's say your stay-at-home parent does not die first, but let's say something unfortunate happens, like they're diagnosed with a terminal illness. There are many life insurance products out there that provide living benefits. So that could be a critical illness or terminal illness, and this can alleviate the financial burden that these medical costs do bring upon your family, your expenses unexpectedly. Additionally, there are products out there that can provide a tax-free retirement income, which is really good for both of you, the breadwinner and the stay-at-home parent, to have that kind of income coming in as well and to be able to rely on that. If you live in a two-income household, or you will be a two-income household, you likely share expenses to some degree. That could be a mortgage, rent payments, utilities, anything like that. You may or may not have a family, but you do rely on each other's income for your current lifestyle. Now, should one of you die, the surviving spouse now takes on 100% of the expenses with only 50% of the income. So that's going to be a major adjustment, and will that surviving spouse be able to absorb all of those expenses? In all of the scenarios I just laid out, major and quick changes are going to have to be made to adjust to the loss of your spouse if you do not have the proper coverages and protections in place. So while this financial aspect is only one of the many that you'll be dealing with as a grieving, surviving spouse, it will seep into so many different areas of your life that you may not think about. For example, what if on top of losing your spouse, you suddenly have to find work? What if you have to figure out childcare and domestic duties? What if you can't afford where you currently live and you have to move or sell your home? A friend of mine was reviewing her and her spouse's finances, and she was like, Desiree, if my husband dies, I can't live here anymore. I will have to move immediately because I can't afford to live here on my own. And she's like, and I'm almost 80. So that was a big moment for her. Contrast that to a friend of ours who recently passed away. Her husband had everything taken care of. So she doesn't have to worry about paying for their house. She gets to keep all their cars. Nothing in her lifestyle from a financial perspective changed for her. Everything remained the same. That's where you want to be, okay? That is the situation you want to be in. Grief will likely take a backseat to financial stress, but in some cases it doesn't. And when grief takes the wheel, we could be looking at a serious mental health crisis on top of all of these things crumbling. We're literally looking at potentially lives crumbling and shattering under the weight of grief. Taking care of the financial aspect can give your loved ones, your surviving loved ones, time to adjust, time to grieve, time to figure it out, time to take care of themselves while they're trying to deal with life without you. That is what you were buying for them, okay? Alongside financial stability, and they will feel your care and your love for them when you have these things in place. So why life insurance? Simply put, you love your spouse, you want to protect them, you want to protect the life you've built with them. You are a true protector. You want to do everything you can to ease their burden and their pain on what may be one of the most worst and difficult days and times of their lives. You want to make sure that you've done everything in your power to ensure that you've taken care of them to the best of your ability well after you've passed. Marriage plus insurance equals a match made with love. One of the leading causes of divorce is due to financial problems. For every 10 divorces, 2 to 4 are due to financial problems. That's almost 50% of divorces due to financial problems. So what if you can lower that statistic because you are starting your marriage on the right financial foot? If you're already married, get your finances in line. If you haven't looked at your coverages in a long time, now's the time to do it because things may have changed. Maybe when you first had your coverages in place, you didn't own a home, you didn't have kids, but now you do. Now you have more to protect. Now you have more to think about. Maybe you don't have some of those things anymore. Okay, so now you want to think about things a little bit differently. You still need to review your coverages to ensure that you are properly and adequately insured, that you're not overinsured, and also that you're not underinsured. Okay, actions speak louder than words, so don't wait. We don't have all the time in the world, so we want to get this ball rolling. And for those of you who think that your insurance through work is enough, I'm here to tell you that it's not. One, it's simply not the best insurance. Two, if you leave your job, you're fired, you're laid off, you change jobs, you retire, guess what? You don't necessarily take your insurance with you. If you do opt to take that insurance plan with you, guess what? It's not a good insurance plan. It's generally more expensive, and it likely has zero benefits outside of a death benefit. You can get better insurance with better benefits at a better price when you have your own personal private insurance in place. Lastly, when you have your own insurance in place, you are in control from beginning to end. The policy belongs to you. You get to choose an insurance product based on your unique situation, what you have going on. When you have work insurance, it is cookie cutter. It is impersonal. It doesn't care about you. It just is what it is. The death benefit is usually $10,000 to $50,000, which, yeah, some money is great, but let's be real, it's not enough. It's definitely not going to keep your family going on for probably more than a year, right? And so these are the things you want to think about. Your work insurance is literally a group insurance that is offered to anybody in the company. It's not special, it's not unique, it's not tailored to you and your situation. When you get your own personal insurance, you're in control. You get the insurance that is best suited for you, your needs, and where you're at right now in your life. If you have any questions for me, drop them in the comments. If you'd like to have a chat about your current situation, I'm going to link my booking calendar into the description. All chats with me are free. No purchases are necessary. We're going to see where you're at, where you want to be, and how we can get you from point A to point B. And please remember to like, subscribe, and share this with anybody who you think can use it. Talk to you later.